Alichi, can I have your view? Umar, what do you understand by taxation of digital business? Abiodun, I would love to have your view. Abalanle, what's your view about this? Anybody? Anybody? What does that mean to you, taxation of digital business? Or maybe we should even start with digital business. What does digital business mean? You have the option of either communicating via the chat box or unmute your mic in a jiffy and let's have your view. Okay, Abiadu indicated that tax implication for businesses conducted online without borders. Okay, okay, that's a good one. Can we have the contribution from others? Bukola Akode, what does taxation of digital business means to you? I'm still waiting for the contribution from others. Okay, Olichi shared a view saying that digital business is a business that uses technology to sell to its customers and completes day-to-day operation. That's a good one. Bolani added that taxation of digital business carried out through the digital means. All right. So sorry, we'll be starting in a jiffy. All right, so once again, the topic is taxation of digital business. This training is anchored by KCP Academy. For most of our usual participants, we don't need elongated introduction. But for the new ones amongst us, KCP is a firm of professional tax practice and auditors. We render tax services, audit services, general business advisory and training. So you all are benefiting from the training arm of the firm's service. My name is Hadekule Ko. By privilege, I am the managing partner and consultant of KCP Academy. is worthy to stress here that every content of this training is just for general business enlightenment, not construed as any advice to anyone. We may not accept liability for wrong applications of the views shared in the course of this training by any participant. Should you require specific and applicable advice, please feel free to reach out to us or any professional firm very close to you. It is no longer news that the process and procedures in which business are conducted is transforming from the usual physical interaction to digital means. By digital means, we mean that wherever you are in any part of the world, you can stay in the comfort of your home or office and request for the service of any firm available online, or request for goods and services to be delivered to you. Gone are those days where if you want to communicate with families or friends or even business allied, you have to write a letter, post the letter through an iPost means, and the recipient will have to wait for donkey periods before they will receive the expected message. But with the developments in the internet space, you can, where you are now, send a mail to anybody in any part of the world, and you will receive confirmation of those messages communicated or the expected response. So that applied into business. When you conduct your business activity in such a way that your intended clients don't or do not have to be physically present with you for you to render or be of value-adding service to them or sell your product to them, what you do or the means through which you conduct your business can be said to be digital. So the problem that this poses is that since businesses are moving into the internet space, it then becomes of more concern to the tax authority. Do we then say that the tax authority also have to move to the internet space before the appropriate taxes could be paid? Unfortunately, our tax laws are not dynamic at the same rate at which the business environment is being developed. So, does it mean that those who are involved in internet business, which we can often call digital business, do they have different form of taxes to pay? What is the position of our tax law with respect to bringing this form of business structure into the tax net? These and many more are what we'll be deliberating on today. But it is worthy to note that irrespective of the nature or the form of service or goods you are selling, it may be possible for it to be rendered digitally. So these days we have what we call, even in the medical space, we have what we call telemedicine. The doctor who is diagnosing any patient may be in any part of the world, while the patient could also be thousands of miles away. And relevant medical consultations can be made, and the relevant advice can be rendered. And in consideration for the services rendered, the doctor doesn't have to be in physical presence with the patient before they receive such payment. So the continuous adoption of this form of business takes taxpayers away from the relevant tax authority in Nigeria. So that is why Nigeria is not the only country faced with this problem. In every part of the world, or most part of the world, they have this concern too. Say, for example, Google is one of a very good example of a business conducted within the internet space. Google, as well as all of its allies, made so much amount of money from Nigeria, or from its customers in Nigeria, but can we say that considerably the expected or adequate amount of taxes have been paid to the country or to the relevant tax authority in the country where their businesses or their incomes are being earned? So this is of concern to many governments across the world, and it is being viewed that it would be unfair if this is not tracked and managed, and the income made within the digital space are brought to within the tax net. It will then be regarded or be seen as unfair to every other form of businesses that are conducted in our usual traditional way, right? So over the years, we have watched brands and businesses grow and changes their operating system in a bid to adopt technological trends to boost productivity and output. So by this, we are not saying conducting your business digitally is wrong. That is not our position. Our position is businesses that are conducted in the usual traditional way, as much as possible, they should be made to pay their fair share of taxes, as well as those who conduct their businesses digitally. The gradual adoption of the technological trends in economic activities has brought about the existence of digital business. So all the several developments we've had in the information technology has made it visible for businesses to be conducted or businesses to be transacted and services rendered to aspiring clients without necessarily being in their presence. So let's start by actually asking a question, just like I did at the beginning of this section. What is a digital business? So for those who are just joining us, you have not missed so much. We are about to set the training rolling. What we have just discussed thus far is an introduction to what we mean by digital business, which we can also call the internet business. And we have also established the fact that irrespective of any industry, a company's business is being categorized. Such services to an extent may still be conducted without having need to be in the presence of your prospective customers or clients. A digital business can be streamlined to businesses whose principles of operation involves around technology. So these days we have what we call the fintech. Fintech simply means companies who are using technology or the internet technology in rendering financial service. We also have what we call tech. The PropTech simply means property technology. Those real estate business who are leveraging on the available technology in rendering their real estate related services, right? So I think we would not be wrong if we also call those in the medical space, health tech, right? Because they do a lot of consultation, health consultation via the internet. It is popularly known or addressed as telemedicine. So telemedicine just means that you don't have to be in the presence of the medical doctor or the consultant before the various medical consultations or advice can be dished out. So unlike the traditional economy, which involves physical operations and activities, the digital economy seems to be in contrast to the mode, to this mode, that is e-commerce, providing seamless opportunities for transactions to be carried out efficiently and effectively. So what is our concern? Why is this particular form of businesses be of concern to us as consultants, as accountants, and as tax authority, or even as taxpayers? Because if this is not addressed, those who are conducting their businesses traditionally may feel disgruntled. And you will bear with me that one of the canon of taxation is fairness. So it can then be concluded that if the peculiarity or those who are operating within the digital space are now brought to within the tax net fairly, then we will say the tax attribute or canon in Nigeria will have lost its expected future. So that being said, what has been done in Nigeria to address or ensure that the businesses or income earned by virtue of the digital services or goods sold digitally are actually brought within the tax net? But before I go on, I've mentioned a couple of examples of entities that operate in this space, but I will also want each and everyone to contribute via the chat box. Can you give me examples of digital business that you know that earns income in Nigeria? I need everyone to contribute. Give us names of businesses that you feel, at least the prominent ones, that you feel that they qualify to be regarded as digital business. Also, Uber is a very good example because they reach out, the customer gets to reach out to the driver through a digital means. Facebook is a very good example. Amazon, our Facebook good, Jumia, we still have more. We have so many of them. Google is another example of them. I need more. Konga, very correct. Konga. WhatsApp, very correct. Very correct. I need more examples. AliExpress, awesome, 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 awesome. So for us that are operating as tax consultants, do you think we have any tax firm that operates digitally? If not, that is the next line of thought everyone should be having. That is the next line of thought everyone should be having. Okay, having said that, do you think there are any advantage in operating digitally? What are the advantages? I just want to hear your view to be sure that we understand this topic in context before we address the tax concern that comes to play. What benefit do you think comes with any business that is being rendered with service or sales are made digitally? It's seamless, good. It's seamless, that's a very, very good one. That's a very good one. Services are rendered or customers are reached seamlessly without so much physical efforts. A very unique and very good example of advantage of this is that your reach. Okay, very good. Umar just mentioned what I wanted to say. More customers outreach. It then means that beyond your immediate country or your environment, you can even have clients or customers across the world, global access to 24/7 also. So it means it's actually. So look at all of these countless opportunities that comes with digital business. You have countless number of clients, irrespective, without environmental or distance barrier. They can reach you, you can reach them, you can be of value, adding service to them, and all of that. So that means also that, does it mean that Nigerian government has to have their presence in every part of the country where Nigerians earn money? So for us as a consultant, tax consultant, I need to look at this unique business development in this way. How will this business be taxed? Where will they be? Do they have a fixed base in Nigeria? Most of them don't even have a fixed base in Nigeria. So the income that are made by these entities, particularly those attributable to Nigeria, how do you think they will be taxed? So Nigerian government, as well as every other government across the world, are still trying to put appropriate tax legislations around this form of unique business structure, right? So one of the things that is a recent development across the world are part of the things we'll be looking at today. Among so many interested organizations, we have propositions made by the United Nations. We have propositions made by the EU, European Union. We also have propositions made by the OECD. We'll be looking at each and every of these. And in the light of the development we have in the Finance Act of 2019 and that of 2020, what development or adjustment has been made to addressing this tax concern? We'll be looking at that towards the end of this section. Let's start with that of the OECD. So there is what we call the OECD Consortium. In the view of OECD, taxes collected by countries around the world can be reduced through various avoidance mechanisms that shifts corporate profits out of the higher tax rate jurisdiction into the lower tax rate jurisdiction. Within the business space, we could identify the positive impact of digital business on the global income or income that can be made by any business or company using this form of business structure. But however good this might sound, right, it adds some negative impacts on various companies in terms of, if this business had been conducted with a physical presence, the authority will have been able to reach or catch up with the businesses, identify or ascertain what their incomes are, vis-a-vis the expenses that have been incurred in rendering this, in earning those incomes, right? And the appropriate taxes will have been assessed on the relevant taxpayers. But given the fact that these people or this form of businesses are spread across the world and they are making income from Nigeria as well as every other country, it then becomes very difficult for those set of businesses to be catch up with. And some multinational entities also use these as a way to actually avoid taxes, right? So the Organization for Economic Cooperation and Development, OECD, has been engaged in projects to minimize tax avoidance. They are not saying that we want to discourage digital business, no, but we want to ensure that let's put in policies and regulations that will ensure that irrespective of the mode of delivering your service, the fair share of the taxes that are to be paid to the relevant tax authority in each of the countries are fairly paid. And profit shifting strategies that exploit and mismatch in tax rules to artificially shift profits to low or no tax locations. So what have we been saying? Irrespective of the benefit that comes with digital business or the digital economy, it has a huge negative effect on the would have been the income that will have been generated through tax across the world, right? So every government is making effort to ensuring that they catch up with the development in the business space, and OECD has identified the disadvantage that could come with this form of business structure, particularly when businesses use this as a way to avoiding paying the taxes that ought to be paid. This is not only applicable to businesses alone. We also have employees in Nigeria whose employers are not in Nigeria. They render their services with the aid or the use of internet, and they are not paying the appropriate payee or personal income tax as they ought to have paid, right? So because of this, it is of concern to the Federal Inland Revenue Service, who subject to tax every company. And it is also of much concern to the state internal revenue services, right? Because they need to catch up with those individuals that earn their business through a digital means, and they have not actually remitted what they ought to have remitted. So this form of tax avoidance may be likely to what OECD identified as BEPS. What is BEPS? What is BEPS? Any form of tax avoiding structure, whether done intentionally or unintentionally, that puts a particular tax authority that would have collected a tax on the income earned at a disadvantage of not being able to either catch up with those taxpayers or potential taxpayers, can be likened or described as what we call base erosion and profit shifting. It is applicable to an individual who earns income from a country through a digital means and are not paying what they ought to pay, whether those incomes are earned through a digital means or otherwise. So if you put on any modality in such a way that the income that ought to have been subject to tax are not easily reached or identified by the relevant tax authority, what happens then can be likened to as what? BEPS. So the BEPS project was set up by the Organization for Economic Cooperation and Development, which we call the OECD. BEPS is a global problem. It's not only affecting Nigeria, it's affecting not only developing countries, but also the developed ones. So it's a global problem that requires global solution. There is need for tax authorities across the world or governments across the world to form a consortium or policies that will subject every potential taxpayers to tax. So tax authorities of the OECD countries came to understand that it is not enough to have your domestic tax laws or to have what we call the transfer pricing rules, but that an extended action was necessary in a more globalized economy in order to avoid harmful tax practice. Let's look at this in the plight of the impact of the adoption of IFRS in financial reporting. Businesses in Nigeria, before the adoption of IFRS, we use what we call SAS in making, as a guidance or accounting standard in our financial reports. That is being faced with a lot of bottleneck, as potential investors beyond Nigeria may not understand the premise or the assumptions on which that financial report is being prepared, right? But with the adoption of IFRS, it becomes much easier for anybody across the world, particularly in countries other than Nigeria, who also have a good understanding of the basis and assumptions of IFRS, to pick up any financials of any company prepared with that similar assumptions and read through, analyze through, and make impactful economic decisions. So this idea is being borrowed in the tax space by various governments by proposing the fact that could it be possible for countries across the world to harness their tax policies globally, such that irrespective of the location of any company whose business is conducted digitally or otherwise, the expected tax on the income made could still be what? Fairly assessed and paid to the relevant tax authority, right? The whole of this idea is a project commonly known as the OECD G20 project. So whenever you come across the OECD G20 project, what they are just trying to drive home at is a consortium of tax authorities across the world through the OECD platform, trying to propose the most possible effective policies, tax policies, to ensure that every taxpayer, irrespective of where they operate from, pays fairly taxes on income in each and every potential market or countries, right? I want to be sure that I'm not too fast, and at the same time, everybody understand what we have said thus far. So I will ask a couple of questions. Who can give us the full meaning of BEPS? Full meaning of BEPS. I want to be sure that everybody is at the same pace with us. Why is the full meaning of BEPS? We mentioned this at the beginning, through this particular session. Who can share with us, communicate via the online, via the chat box, what is the full meaning of BEPS? Correct. Base erosion, profit shifting. Who can give us in a very summarized way the whole idea about BEPS? We had also mentioned this in the course of this session. What is the whole idea about BEPS? In a very summarized way, what do you think about when we say base erosion and profit shifting? Anyone? The whole idea about BEPS, as earlier explained, are business model structures that are being implemented by various companies, particularly the multinational enterprise, in such a way or with the intent of shifting their income that are earned in tax territory that attract higher tax rates, thus shifting this income to tax territories or countries that are of lower or no tax at all. So in a simple way, we can say it is all about structures of policies or strategies to avoid taxes legitimately. That's very correct, Adele. That's very correct. So we can go on. Before we go on, who actually proposed BEPS? BEPS is proposed by which organization? Which organization proposed BEPS? OECD, correct. OECD, correct. Very, very correct. Good. So it means we are on. Now, what is the full meaning of OECD? What is the full meaning of OECD? I just want to be sure that we are on point. What is the full meaning of OECD? Can somebody just provide that on the chat room or the chat box? What is the full meaning of BEPS? I mean, of OECD, of OECD. Organization for Economic Cooperations and Development. That is very good. So we are good to go. So as earlier explained, what are we looking at today? We are not considering different types of tax. No. Nigeria, we know, already have the following types of tax. Company income tax payable by companies that make legitimate income. Education tax that is expected to be paid by companies that have accessible profits. Personal income tax, which is expected to be paid by individuals who earn a taxable income, but a different nomenclature of these in respect of taxes applied on the income of employees is called payee. You will agree with me that whether you call it PIT, personal income tax, or you call it payee, pay as you earn, it is calculated in the same way. It is regulated by the same tax law, right? But the unique differences is that while pay as you earn applies to income earned by employees, personal income tax is applicable to individuals who are in a self-employment or directors or owners of various companies that earns income from more than one sources, right? That's been said. So we are not proposing another form of tax for digital business. Rather, we are looking at, one, how do we catch up with these businesses or entities that run their business through the use of internet? Most of them don't have a physical place of business. So it becomes very difficult for the various tax authorities across the world to catching up with them. So what is being done across the world, because this is not a Nigerian problem alone, it is a problem that every country across the world are being faced with. Nigeria not being exempted from this concern. So what is being done globally to address this unique form of businesses? This is what we are looking at today. So I urge you to listen attentively. So BEPS was set up in June 2012, and it is currently championed, as we earlier explained, by the OECD. And this is also endorsed by the G20 leaders to revise the global international tax system. So their intention is it's a group of people that are that comprises of various representatives across the world, right? Particularly those nations whose economy are very influential in the world, in the global business, right? They have come together to propose a much encompassing and impactful tax policies that can be the idea of which can be sold to various countries. So it is also important to stress here that policies made by OECD cannot be enforced on any country, right? Countries that decide to be a member or subscribe to a proposition made by OECD do so voluntarily, right? Please take note of that. OECD in 2013 estimated that the global corporate income tax revenue losses as a result of BEPS is between 4% to 10% of the global CIT revenue. So what we are saying is that 4 to 10% of the total taxes that every country across the world will this justifies the need for every country, particularly through their tax authority, to harness efforts to the recovery of these sums that have been lost. So BEPS basically refers to tax planning strategies that exploit gaps and mismatch in tax rules to artificially shift profits to low or no tax locations where there is little or no economic activity, resulting in little or no overall corporate tax being paid. So why do we have BEPS? Why do we have BEPS? One of the reasons is reforms in international taxing system to tackle tax avoidance. Every tax authority wants to ensure that every taxes that have been avoided, the loopholes in the tax law that gave room to this avoidance is being blocked. So that is one of the reasons why we have the various action points on BEPS. The second one is it seeks to ensure that profits are taxed where economic activities take place and value is being created. So another very germane essence of the BEPS action point is that it is not enough to say a company is paying tax, but rather we want to ensure that the taxes are being paid to the right country's tax authority where primarily the incomes were earned. Let me take that again. Hello, sorry for the interruption. So earlier on, I was trying to explain the second point on the reason for BEPS. We said it ensures that profits are taxed where economic activities take place and value is created. If you have a company, let's say a Ghanaian company that earns income in Ghana, as well as every other countries across the world, but pay tax on this income earned globally entirely to the Ghanaian tax authority. It is wrong. It is wrong because the proportion of income that have been earned in each other countries, the tax due on them should have been fairly paid to the country where the value was actually created. So that is one of the reasons why we have the concept or the various action points around BEPS. I believe that is understood by everyone. The third one is for more transparency from the multinationals. So we've seen that businesses that operate within the nation have lesser chance to avoid tax compared with the multinational entities. Multinational entities are entities that operate in more than one country. So they are one of those forms of business that actually exploit the loopholes that gave rise to what we call BEPS today. So to give more transparency, to ensure that companies like Google pays fairly the incomes that, the tax on the incomes it earns in each of the country, and its reporting system, as well as the tax payment compliance is as transparent as it ought to be. The fourth one is it helps to mitigate, or in an attempt to mitigate, continuous reduction in tax revenue generated by countries due to sharp tax practices by multinational enterprise. So BEPS helps to, help us to identify the fact that gradually countries or tax authorities across various countries in the world are gradually losing revenue to circumstance be portrayed as BEPS. So in an attempt to mitigate these, we have the various action points proposed by OECD as a way to curb or to curb tax avoidance. Next one is what we call perceived inequalities in taxes paid by multinationals. So what that means is that by virtue of the canon of tax, it is fair to say that the more income you made, the more proportionate taxes that should be paid. But the reverse is this situation, because we have organizations that operate through the traditional mode of business that pays more, while we have entities that operate through digital means, and it becomes very difficult for the tax authority to catch up with them. As a result, they end up paying little or no taxes at all. So for us to curb this inequality that arose because of this BEPS principle, there is need for us to know what are the issues that give rise to BEPS and how can these issues be curtailed. Then the last one on this slide is to understand or curb or provide policies around complex tax structures adopted in the form of what? Tax planning. I believe that is well explanatory. So before we go on, I want to confirm or to be sure that everyone can hear me very well. Please confirm by indicating I if you can hear me very well, because I have feedback from some people that they said they cannot hear me, loss of audio. Please indicate on the chat box I if you can hear me very well. Indicate I on the chat box if you can hear me very well. Okay, I need more response. All right, so it means we are fine. Okay, if you also understand what we have explained thus far, please indicate yes on the chat box. I want to be sure that we are on the same page and everyone is being carried along. I need more response. Okay. I also need everyone to confirm if you do not have any question. If you don't have any question, if you have any question at this point, please indicate. You can state your question, but if you don't, if you have no question, just indicate no on the chat box. If you don't have any question, just indicate no. I just want to be sure that all the concepts that have been explained thus far is well understood. We have explained the concept of digital business as a form of business structure or mode that is being conducted digitally or via the use of internet, right? And we've also explained the traditional form of business, which is what we have been used to. For you to be of service to your clients, you need to have a physical office or a shop or a place of business where your customers or your clients will walk into and enjoy or patronize your service or your goods, right? So, but the opposite of this, when you don't have to see anybody or each other in person, but your value adding service to each other is what we took as digital business. And this is not limited to any sector, right? It is, the technology is applicable to virtually all sectors of businesses across the world. And we have given various examples of such business. We have the fintech, which is entities or businesses that render financial services through the use of technology. We have also identified what we call telemedicine, right? Which is a form of business that we render, a form of consultations whereby medical personnel addresses the concerns of their patient through the use of internet, right? We also have what we call the PropTech, which is the property technology. It is a technology applied in rendering real estate services, right? So this is going across every industry. So I'm looking forward to instances when you will have a form of businesses relating to our space in rendering accounting service. Maybe we call it AgTech, or audit service, we call it AudTech. I'm just joking. But we are looking for such development too, when we don't have to be physically in the presence of a client or in their office before we render such professional services to them, or things relating to tax, we call it tax tech or something, when you don't have to physically see your business, your client, but your services will be well appreciated, it will be value adding, it will be positively impactful on the client's operation, and you'll be well remunerated for this. So this should be the thinking of everyone operating in this industry of ours. So next to it is what we will be looking at. We call this the tax haven. Tax haven. What is a tax haven? Anybody with an idea, what is a tax haven? Anybody with an idea, what does tax haven means to you? Anybody? Anybody? Okay, for the sake of time, let me just take it up. So tax haven does not really mean a country where you don't pay tax. However, if you have any country where taxes are not paid, it can be likely to be a tax haven. But generally, this concept is being used So refers to tax jurisdiction. Oh, comments are coming in. That's awesome. A jurisdictions or country where with little or no tax. Oh, awesome. A place where you pay little tax as compared with other countries. Awesome, 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 awesome. So we are on the same page. So it does not mean where tax jurisdictions where taxes are not paid or payable alone. If you have any of such, yeah, it's a good example, but more encompassing, it can be looked at or referred to tax jurisdictions or countries in any part of the world where the tax rates payable on the incomes earned is materially low compared with what is obtainable in countries across the world. So international tax planning has revolved around playing the rules of one tax reductions against another by exploiting loopholes in the local tax legislation of each jurisdiction. What does this mean? What we are referring to is that multinationals or business conducted across the world, the business owners has to put on effective tax strategies that will make them have little or no tax exposures. So in an attempt to doing this, they will structure their business in such a way that they are benchmark the tax policy of one country vis-a-vis the other and decide to situate their business in a way such that they will have maximum benefit from the less paying tax jurisdiction as compared with the higher paying tax jurisdictions. So it also basically involves the arrangement of transactions in such a way that profit is shifted from regions with high tax jurisdictions to regions with low to no tax jurisdictions. We call these tax haven. So I believe everybody understands it. So we have quite a number of these tax jurisdictions across the world. We have, for the purpose of this session, we have identified the following. British Virgin Island is a typical example of one. Cayman Island is a typical example of another. Luxembourg is another one. Mauritius, which is very, very common, is another one, and Netherlands. So what we are saying is that if you look at the tax policies or laws of this entity, of these countries, right, they have a low tax rate or policies around incomes and on operations and conducted in their country as compared to countries like of ours, like Nigeria, Ghana, and the likes, right? So it is intentional that multinationals and every other business owner structure their businesses around countries or around the tax haven with the objective of what? Having less exposure to tax. There was a common or recent news around this of recent. Who can remind us what happens? Who can remind us what is the what was the caption of the news around business owners, some church or pastors, some politicians or presidents of various politicians across the world having hidden investments in certain tax haven across the world? Can somebody on this platform bring us to speed the caption of the recent news that captures that? Did anybody remember? There was a news around this early this month. What was the caption of the news? Anyone? Anyone? Don't tell me. Yeah, exactly, the Pandora. I want to be sure everybody understood or read or heard about this. please stay informed. You need to go and Google about this and read about that. It is all about the fact that certain group of people who have legitimately or illegitimately amassed wealth decided to invest their wealth in some tax havens, right? One of the reasons why some of them could have done this is because they don't want to have more or unnecessary exposure to tax. Some of them might also have reason other than for tax purpose. Maybe they just don't want any other person to know about what their worth might be. But please, let's try to Google about that and read more about that. So we mentioned, we talked about the BEPS as a way to avoid tax. What are the things that OECD has proposed to addressing some of these BEPS concerns, right? There are various business structures or strategies or planning that could give rise to BEPS. One of them is what we call the digital economy, right? So aside that, we have other concerns around transfer pricing and the likes. So as we speak, there are 15 action points that addresses various areas of BEPS concern. The first one is the action point, action 1, which addresses taxation of digital business, digital economy, which you can also call digital business. So if you take time out, for the sake of time, we probably might not be able to look extensively at the various propositions made by OECD, but we'll try as much as possible to summarize it for your understanding. But after this section, I will encourage you and everyone to try to solve more information about all of this. So action point 1 actually addresses the concern on digital business. Action point 2 talks about how to neutralize the effect of hybrid mismatch arrangements. That is, you have partly physical operations and partly digital operations. Action point 3 seeks to talk about how to strengthen control foreign companies. That is the CFC rules, right? I believe sometimes around May, there was a returns that was filed in this respect. But what this talks about is propositions are made by every tax authority across the world to disclosing the accounts of foreign personnel in their countries, to those countries where they originally were citizens. And the whole essence is to ensure that these citizens, the citizens of various countries who have foreign investments, they have paid the appropriate tax on those investments. Then action point 4 talks about how to limit base erosion via interest, deduction, and other financial payments. This is what we call thin capitalization policy in Nigeria. Who can tell us what thin capitalization policy is in Nigeria? What was the recent propositions in our Finance Act about thin capitalization? You will bear me witness that prior to 2019, Nigeria does not have a conscious policy on thin capitalization. Thin capitalization is just trying to benchmark the proportion of your debt, foreign debt equity, with the foreign equity. The foreign debt to equity of investments by foreign personnel. That is, if a foreign entity or individual wants to make investments in Nigeria, right? Because the interests on debt is usually treated as an allowable expense. Entities, foreign entities that make investments in Nigeria, prefer to bring their investments into Nigeria in terms of debt as opposed to equity. And why that is not good is that that encourages what we call capital flights, right? A situation whereby the investors, the foreign investors, cut away all the returns on their investments as quickly as possible, as opposed to using these returns to expanding their operations in the country where they are making the investment, right? So Nigeria consciously made the Think Capitalization Policy. For more information about this, please check the Finance Act of 2019 and 2020. There was a deliberate policy that has been made in Nigeria that should guide how foreign investors, what should be the proportion of their debt to equity ratio. Just for your benefit of our listeners, let me just give it to you. But for more information, I will encourage you to still go and read more about that. We have what we call Proud 2019. We don't have anything around that area. Rather, any foreign person can just bring all of their investment as debt or all of their investment as equity. So Nigeria now the Nigerian government now proposed a policy which we call the 70 to 30% rule. That is, your equity investment must not be less than 70% of your total capital or your total investment. You can do everything 100%, but a minimum of 70%, while the foreign debt by the owners of the business should not be higher than 30%. That is what we mean by the 70 to 30% rule, right? But I encourage you to go and read more about it, such that you will be in a better position to advising your clients clearly. But if you need more talk about this, feel free to reach out to me. I won't spend much time on that because that is not the appropriate, that is not the main concern of this section. Then that is as far as the action point 4 is concerned. The action point 5 talks about counter harmful tax practices more effectively and taking into account transparency and substance. So this is, these are part of the propositions as a way to avoiding or discouraging tax strategy that could give rise to BEPS by ensuring that by ensuring that multinational entities or digital businesses across the world are as transparent as possible. Then action point 6 talks about preventing treaty abuse. So that talks more about the various double tax treaty agreements or various treaty agreements we have. This policy talks much more about that, to ensuring that businesses don't abuse the real intent why the tax treaties are actually put in place. Then action point 7 talks about how to prevent artificial avoidance of permanent establishment status. It is on the premise of this, various organizations, including Nigeria, were able to define what actually qualifies as permanent establishment. That is section 13 of our Company Income Tax Act. Then action 8 to 10 talks about various areas of transfer pricing. Action point 11 talks about how to establish methodologies to collect and analyze tax data, analyze data on BEPS, and the action point to addressing it. Action 12 talks about disclosure of aggressive tax planning for taxpayers. So all of these action points addresses one or two or more issues that could give rise to what? BEPS. We have said that a very synonyms of BEPS is what company do or could do to avoid taxes. Action point 13, re-examine transfer pricing documentation for everyone that has client that has potential transfer pricing risks. I'm sure as of today, you must have filed your various transfer pricing returns for your various clients or your companies, but you should also have put in place what we call the transfer pricing documentation. Please, if you have not done this, ensure it is being done before FIRS raise penalty. Penalty for this inaction is on a minimum of 10 million naira, and it will not be good for you to have such exposure. Should you have any concern around this, it is one of the scope of services we render in our tax unit. Will be available to be of value, adding services to you or partner with your firm in being of value-adding services to your various clients. Then action point 14 talks about how to making dispute resolution mechanism more effective. It is drawing from the propositions that we have in this action point 14, that you now have various synergies among tax authorities across the world. Various tax authorities are now trying to form in a consortium where they can freely, for mutual benefit, share taxpayers' information, such with the hope of ensuring that each and every tax authority in their own country has a fair share as tax on the income earned by various businesses. Then action point 15 talks about developing a multilateral instrument. But what is of concern to us in all of these action points is action point 1 and partly 2, because these are the areas that actually addresses the various concern of various businesses that might be involved in digital economy. I will urge you to personally go and read more about this, and we will just try as much as possible to summarize this. Any question at this point before I give my final verdict? My final submission is around what has Nigeria been doing to address the concern of digital business. What have we done looking at our Personal Income Tax Act? What have we done looking at our Company Income Tax Act? What have we done looking at our Capital Gain Tax Act? What have we done on the Petroleum Profit Tax Act? What have we done with respect to our various regulations, Finance Act, and every other FRS or tax circulars that have been proposed as a way to bridging or catching up with this undeniable enemy proposing itself as digital business. As of today, digital business are not expected to pay a different form of tax, right? But I will want to stress this. I would like to make reference to what is obtainable in Kenya before we address the concern in Nigeria. Nigeria has not done much, but Kenya has taken a much more giant step to ensuring that every businesses operating digitally in their economy pay a flat rate of tax, whether it is a Kenyan business or a foreign business. On every income that is being earned digitally, there is a flat rate which the Kenyan Tax Authority has proposed to be 1.5% of the digital income. Has Nigeria done anything to address this concern? The only thing the Nigerian government have done, which in my view or in our firm's view, we think that it is not encompassing enough. A lot of these digital businesses are making so much money from Nigeria, and Nigerian tax authorities and the government have not done enough to catching up with the development in the business place. What they have done thus far is just to One, define what we mean by the thin capitalization I've earlier explained. They also define that every organization that earn income in Nigeria, whether operating physically or otherwise, or through a digital means, the income before it is being repatriated is expected to suffer what we call a minimum tax or withholding tax, maybe 5 to 10%, depending on, within the range of 5 to 10%, depending on whether Nigerian has a substantive double tax agreement with the country from which the foreign business operates from, right? Then the second thing that have been done is that for every foreign businesses conducted in Nigeria, which we can call imported service, there is a provision in our VAT Act that actually subjects a larger categories of these businesses, their incomes to VAT. But how will they, or how have they been catching up with this? The Nigerian government has proposed that whoever that patronizes those foreign or digital service will be expected to not only self-charge itself of the VAT that should have accrued on such services, but also withhold portion of the income before the net is being paid. What happens if this is not done? The beneficiary of such services, which is in Nigeria, will then be made to bear the brunt of the law. Then the fourth thing they have done is that they define what we call the SEP rule. SEP means, who can tell me SEP first? Let me be sure that we understand it. What does SEP means? What does SEP means? S-E-P. Do anybody have an idea about what SEP means? Let me be sure that you've heard about that before. The SEP rule was actually introduced in our Finance Act of 2020, further buttressed by the circular issued by the finance minister. SEP, okay, awesome, Adelaide, awesome. SEP means, for the benefit of those who have not heard about it before, significant economic presence. So the Nigerian government has proposed that by virtue of this SEP rule, that businesses that operate digitally or otherwise that are not Nigerian company, but earning income from Nigeria, provided they have a significant economic presence, they will be subject to tax in the usual way that the traditional businesses will have been subject to tax. But at what point do we say a company, a foreign company, has a significant economic presence in Nigeria? They went further through the circular introduced or issued by the finance minister to defining what a significant economic presence means. It was then concluded that when a foreign entity earns on a minimum 25 million naira from the Nigerian economy, equivalent on a standard rate of $10,000 from a Nigerian economy, it can then be assumed to have a significant economic presence in Nigeria. The impact of this is that in addition to the withholding tax that must have been deducted and the VAT that must have been self-charged by the entity to whom they were of service to, they are also, such companies are also expected to file in what we call the self-assessment returns. That is the company income tax returns with related company income tax computations, right? But they've not been able to come out clearly. What happens if these companies are not even in any way traceable to any PE in Nigeria? How will they catch up with them? Are you saying that FIRS will leave Nigeria to be looking for where those companies are situated across the world. How will this impact on digital business that has no place of business at all? There are a lot of digital business that don't even have any license office at all. How will this law or proposition catch up with them? If anything is not done on the side of the Nigerian government, this particular inaction will then be termed as being unfair to every traditional business that legitimately earns income in Nigeria and pay their fair share. So that is what we have for you today. I want to confirm if you have any question or contribution, or how has this impacted on your services to your clients or your employer, or what are those concerns that you want us to share our professional view on? I would love to hear from you. But if there is no question, we probably may just hand it up here today. But while we look up to that, I will want to hear from you. Any question? Do you understand what we have explained thus far? Is there any area you want us to throw more light on? Is there any concern that you want us to, that you felt that we have not addressed, you want us to address? Or are you having in any way certain challenges in the course of you rendering your service, particularly to your client that operates digitally, or you've been having some concern with FIRS or SIRS, as the case may be? We'd love to hear from you. And we also want to have your feedback on how this public training has impacted on your knowledge and your work. We'd love to have your feedback, please. Feedback, please. Okay, I did propose that, ask a question. How will FIRS know the revenue of companies having 25 million naira and above according to the SEP rule? Oh, okay. That is one of the concerns that we are also expecting the relevant tax authority to throw more clarity to, right? Because except for businesses, digital businesses that has or maintains bank accounts with any Nigerian banks, right? There will not be any way they can independently ascertain whether any company has reached up the 25% rule. But what is objectively available to us is that they probably might just rely on entities that has or maintain bank accounts with any of the Nigerian bank, go through their banks and randomly encourage the tax authority, the banks to place a lien has not come out with detailed clarity other than that very approach. I hope that answers your question, Adeleye. Any other question? Any other question? Okay, Adeleye, that's very good. Adeleye is asking, how will FIRS tax Facebook, Twitter, Instagram, and WhatsApp? Yeah, it is very simple, and we've seen what the Nigerian government did when Twitter was banned. One of the things they have proposed is that all of those digital businesses, whether you are incorporated in Nigeria before now or not, number one thing is that all of those businesses are encouraged to, first of all, be incorporated in Nigeria, right? So one of the conditions the Nigerian government gave to Twitter was that they must be incorporated in Nigeria, even if they want to operate virtually. So that's one of the ways that they could catch up with the likes of Facebook, Twitter, and Instagram. Each of these entities will be expected to be registered as a business in Nigeria with the CAC, and they probably by extension may then be expected to, they may choose to maintain a bank account or not, right? But I believe that FRS may then regularly go through the record of CAC to identify how many of these virtual businesses have complied with that very policy or not. And they might use any of the digital means as was done, like the ban that was placed on Twitter then. They may then apply similar sanctions or measures on any of these virtual businesses. That is what we have at the moment. I don't know whether anybody has any contributions, or Adilai, I hope that answers your questions. Okay, Abiodun is asking that companies that operate in Nigeria but enjoy digital services are expected to self-charge themselves and remit to the right tax authority. But he's now asking that were they also expected to withhold or self-charge withholding tax? Yes, but we will not use the term self-charge for withholding tax. They are not self-charging for withholding tax. They are expected to deduct from the income of the digital business, deduct withholding tax, and remit the nets, right? But where they so fail to deduct the withholding tax, they will definitely have no other option than to bear the withholding tax themselves, right? So please, I think the professional term should be deduct withholding tax on the income payable to the digital companies, but not self-charge. But self-charge will only be applicable where they so fail to deduct the withholding tax, they could then bear the cost on their own. I hope that answers your question. All right, any other questions or contribution from anyone? Any questions or contribution from anyone? All right, Abiodun, thank you for appreciating what we do. Thank you so much. I still await contributions from anyone or questions. Okay, in the absence of any other question, I want to sincerely appreciate your time to participating in this training. I want to thank you and hope that you will give us positive feedbacks on how to improve what we are doing, particularly as regards these trainings. We are open to being of service to you or collaborating with you if you have any concern on your job. We have in-house skills on all of these areas. And I will encourage that should you have any concern, feel free to reach out to me. It's my WhatsApp line. I'm offering that you can ask me any question, or if there is any way you want us to be of service to you. I'm also sharing my email. You can reach out to me, acol@kcp.com.ng, or you send mail to info@kcp.com.ng. To get access to this recorded session, I will encourage you to subscribe to our YouTube channel. We usually upload every recorded sessions of our trainings there. It will be made available. Ensure you follow us on LinkedIn to have regular updates, and our various other social media, Facebook, Instagram, and Twitter. We would love to have feedback from you and know how we can be of value, adding service or advice to you and your clients. God bless you. Enjoy the rest of the weekend, and we hope to see you again. Watch out for our next episode on our training academy. Thank you. Thank you so much. Thank you, thank you, thank you. So in the absence of any other updates, that will be where we will end it today. Thank you so much. We sincerely appreciate you. Thank you. Abiola, thank you too. Thank you so much.